So we finally got what we've been waiting for, Michael Burry's 13F filing. And this one is pretty interesting actually, not just from the stocks he bought, but the structure of the portfolio, which is very, very bearish in my opinion, and is very conservative, as I believe Burry is worried from potential stocks missing earnings, because a lot of big companies like Amazon and many others, they've been reporting horrible earnings, if not earnings at least in terms of guidance, which I believe is going to get worse every single quarter. And I believe Michael Burry agrees with this from the structure of his portfolio. He kept GEO and he added over 300% to the position, and I was not surprised to see him back in CoreCivic, which is a stock that I own. But I have to say, from me watching and following Michael Burry for years and years, I pretty much know how he trades GEO. He buys around $6 or under, and he sells above $8. And both GEO and CoreCivic, they made a big move, pretty much unjustified, just because the Republicans were poised for re-election and stuff. And every single election, whenever the Republicans are poised to win, even if they don't win, those stocks make massive moves and then they come back to earth. Okay, and the stock ran to $9.50, and my stock CoreCivic was pretty close to $12 per share. I was up more than 25% on my cost basis, and of course I did take some profits because it was just pretty much unjustified. And again, I believe Michael Burry did the same. And I know I'm gonna get some, GEO shareholders telling me that no, he didn't do it, he's keeping it for the long term. Well, I think we both know how Michael Burry invests. He's not really a very long-term oriented type of investors. If he sees an irrational move, which is something like GEO and CoreCivic, I am sure he took some profits on those stocks. And again, we're not going to know that before the next 13F. But despite GEO being at $8, and CoreCivic being at 11, I believe both of those stocks are still extremely undervalued, especially CoreCivic. If you take the CoreCivic's net asset value, it's around $25 to $30 per share. I did many analysis on GEO going into the 10K and the properties they own and comparing them to how much they sold them, which is 2 to 3 times book. And it's the same thing with CoreCivic. Yes, the business is declining, but they have assets which, if you deduct the debt in terms of CoreCivic, it's worth more than their market cap, which means they're trading below, again, liquidation value. But these stocks can be left for the dead for years if we don't have a change in sentiment that could encourage investors to potentially invest again in GEO and CoreCivic. And the only thing that's going to cause that is us having a Republican Congress or a Republican president, which is not going to say, I'm going to end private prison, even though he cannot end private prisons. And we both know that. But that scares away a lot of hedge fund managers and institutions from investing in those stocks. So I believe, those stocks can keep going up and down. And whenever we get to a Republican, controlled House and Senate and a Republican president, potentially in 2024, there would be a massive change in sentiment in those stocks, like something like CoreCivic. It was trading at $20 per share before Biden got elected, and it went as low as $8 per share. So I still own CoreCivic, but I trimmed some of my position around a 25% gain. And if it ever goes under $10 again, I'm willing to buy the stock even more. All right. Now, this is another stock that Michael Burry bought, which is QRTA, Quartia. And again, I want to warn investors that are, trying to copy, for example, something like Quartia. All right. The main reason I'm saying that is because Michael Burry, as he said in his MSN article, he sells whenever a stock hits a new 52-week low. This is what Michael Burry said. I prefer to buy within 10 to 15% of the 52-week low. And he said, if a stock breaks to a new low, in most cases I cut the loss. That's just the practical part. I balance the fact that I'm fundamentally turning my back on potential greater value with the fact that since implementing this rule, I haven't had a single misfortune blow up my portfolio. So if Michael Burry bought, QRTA around $2.13, for example, in July in the 13F. Either he sold on the big run when it went up, or maybe he cut his loss because now it's trading at a new 52-week low. So I'm sure Michael Burry is out of QRTA. Maybe he's not, maybe he doubled down. But this is what he said. So the odds of Michael Burry selling at a new 52-week low is very, very high, which is why before I try to look for a Michael Burry stock, I always look, did the stock make a huge 52-week low? Because most likely Burry sold the position, which is again why you shouldn't really be trying to copy Michael Burry unless you take just his stocks as ideas and you do your own research, and then maybe you decide to buy this specific company. But you should not just copy him just because he bought it, because it's a very unpredictable person. And again, we're going to find out if he actually sold GEO or some of GEO on the next 13F. All right. Now, this is another interesting defense stock, Aerojet Rocketdyne, and I was personally looking into these stocks. They have a bigger backlog than their market cap. And again, if you notice between all those names, they are pretty defensive. They have high free cash flow. Some like Aerojet has high backlogs and stuff. So he's trying to protect himself from those companies or any companies potentially missing on earnings. As such stocks normally, as they have a big backlog, their earnings are more predictable than something like Google or something like Amazon or even Apple. All right. And this is a pretty interesting stock. When I looked at it and it was around $42 per share, I found it a little bit expensive, and I must have made a mistake because Michael Burry bought it at $39 and now it's sitting at $49. So again, I think the stock is a little bit expensive, and I'm not going to FOMO into it. If it ever gets back to $42 or $40 per share, then I will reevaluate and maybe open a small position. And you have other stocks like Charter and Liberty, and they have a lot of debt. And that is actually not bad in terms of inflation and whenever the Fed is hiking rates. Because as Michael Burry said in his Twitter, whenever the Fed hikes rates, most of those bonds and the debt that those companies owe, they actually trade below par value. For example, the bond will not be trading at 100 cents on the dollar. It could be trading at 90 to 92 cents on the dollar, which actually allows them to buy back their debt much cheaper than they had before the Fed actually starts raising rates. The second reason why debt is good in times of inflation, because the debt is getting inflated away, especially if you have companies that have the pricing power to actually keep hiking prices, because they can keep hiking those prices, but the debt is staying the same, especially if it's a fixed rate at a long period of time. Those are normally the best type of companies to own if they have a lot of leverage. Many tobacco companies fit this category. They have the pricing power to raise it, for example, 8 to 10% per year. But again, the debt is still the same, so the debt is inflating away, and it allows them to buy the debt back cheaper just because the Fed is raising rate and there's some uncertainty around the environment. So again, we don't really know what Michael Burry has in terms of shorts, but again, GEO is not 37% of his portfolio. He has some international stocks which we don't know about yet, and I'm going maybe to do a video on them in future. But as I saw, and I believe Michael Burry is worried from the macro environment and from uncertainty around earnings, and he's trying to position himself in some type of stocks that could either beat earnings or hold their earnings no matter what. And stocks like Amazon and many Netflix and many other Disney and many other such names, they don't really fit this category. And I believe he's just being conservative. He's not going aggressive in any of those names, mainly because of other names missing on earnings. All right. So I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.